Hey, thanks for watching this video. Matt Benson here. I've got Apollo from Dimensional Fund Advisors with me here as well. Wanted to have a quick conversation around the US dollar as the global reserve currency. We get a lot of questions. I'm sure you've seen a lot of headlines around is it safe to assume that the US dollar can continue to be the global reserve currency? And in particular, if you're entering retirement or newly into retirement, can I make that assumption for the next 30 plus years of my retirement?
Yeah. Hi, Matt. Great to see you. It is a really important question, and to kind of do it justice, it might be useful to get some background on the US dollar and how it evolved over the years. And as we know, for a long time, towards the beginning of the country, there was not $1 bill. I think a lot of currencies that existed, a lot of banks, different regulations, and things actually really got streamlined, about 100 plus years ago. And to me, if I were to start a story, it would have to be with President McKinley, because that election, there were two different candidates, McKinley and his opponent, and there are two different ideas about a precious metal that would back up the dollar. In other words, that the government would have to have that precious metal before it can print dollars. And one of the candidates was silver, and the other one was gold. Well, guess who won? McKinley, and he was backing up the gold standard. And that's what happened. And for many, many, many years, in order for the US government to print a dollar bill, it needed to have gold in the bank. And I think that gave everybody in society a sense of comfort that this dollar is backed up by gold, and it's not like the government can print willy-nilly dollar bills because it needs to have the gold in the bank. And I think that was something that was comforting to people. Now, in the late 60s, what happened was the economists were pointing out that we have more people in the country. The economy is getting bigger and bigger, and we're just not digging up enough gold to print all the dollar bills that we needed to function as an economy. And those are a very legitimate concern. And the way that we addressed it as a country was back in 1971, President Nixon goes on TV and he tells the world that as of today, the dollar is no longer connected to gold. We're breaking that link. And as of August of 1971, the government can print dollar bills not because they're backed up by gold, but rather because we believe that the government will somehow be responsible in printing dollar bills. And as you can imagine, people were a little bit anxious. Like, wait a second, you mean to tell me that the government can just print dollar bills with no backstop? They can run the printing machine day and night? Well, that doesn't sound good. And for the first part of the decade, actually through the 70s, it didn't work out very well because there was a very high inflation that came, and it wasn't necessarily caused by that delinking of the dollar with gold. We also had the 73, 74 with the oil crisis, so forth. But one thing that became really important, and I want to start with, is that what became really important in the 70s was this idea that the dollars are not really being printed and released in society by the government. And this is a myth. It's not the U.S. government that actually prints the dollars and puts them in the economy. That's not how it works. That entity that we actually entrusted with that particular responsibility is the Federal Reserve. So the Federal Reserve basically is the only entity that can release dollars in society. And for the decade of the 70s, there was a lot of connection. There was a lot of interference from politicians and the White House into the Federal Reserve. And part of what happened then is that the decisions that the Fed made were not really based on data and economics, but rather on political decisions. And that did not work out very well. And in the late 70s, somebody came along by the name of Paul Volcker, and he was the Fed chairman who basically said, no more monkeying around. We're not going to take any more of this political influence, and we want the Fed to be fiercely independent. And that was his decision. I'm not going to make decisions based on politics, but rather on what's right for the economy. And since 1980, we have had an incredibly successful experiment because the dollar has maintained its value. It's become the number one most desired currency in the world. And we've had an inflation that was on average about 2%. So, once we get past those 70s days, we had an amazing success by letting the Fed be independent. And the dollar, even though it was not backed by gold, it maintained its value. It's no doubt in my mind. What happened is in 2022 with the pandemic, we had some inflation, and that's when we had a little bit of a spike in inflation. It came back down relatively quickly, but that's when a lot of people now kind of ask the questions, well, with the retrenchment from trade and the inflation that we had in 2022, is it possible that the dollar might not be the dominant currency of the world? And basically what's called the primary exchange reserves, and we'll talk about it in a second. And the answer is a lot of things are possible. The British pound at some point was a dominant currency, and it's no longer the dominant currency today. So is it possible? It's possible. Is it likely or imminent? In my opinion, not at all. Not at all. And why is that? I'll give you two or three reasons. First of all, is if you look at of the foreign exchange reserves, and you look at basically what countries are holding, as of the end of last year, about 58%, so about 60% of all the reserve currencies were in dollar. And that is, almost three times as much as the euro, the Japanese yen, the pound, and the Canadian dollar. Those are the dominant currencies. And over the years, if you go back a whole decade and you see how has this changed, well, we do see that the US is a little bit less than it was in 2014. And at the same time, it basically, euro lost a little bit, and the currencies that gained were pretty much like the Canadian dollar, the British pound, and the Japanese yen. There's a little bit of a diversify there, but it wasn't overtaken by any means by the Chinese renminbi or the Russian ruble or anything else. So the U.S. is still the most dominant foreign exchange reserve out there, and it's very, very unlikely that's going to change in the near term. So why am I saying that? Well, I'm going to give you three reasons for that. Number one reason is that people around the world prefer the dollar. They trust the dollar more than any other currency. If you are a merchant in Colombia or Italy or you name it around the world, Nepal, everybody wants dollars. If it's not the dollar, the question is, what is that alternative currency? What's the alternative to the dollar? Do you really believe that somebody in Croatia or in Greece would prefer the Chinese renminbi or the Russian ruble or anything else but the dollar? I'd be shocked. I think that you can look at the data, and what you see is that as of the end of last year, roughly about 93% of the average daily volume of all foreign exchange involved dollars. That was the number one currency. Everybody wants dollars. Nobody else wants any other currency relative to the dollar. And the next one over was the euro, and they're only involved in about 5% of these daily volume of transactions. And then you look at everything else, and it's kind of minuscule. It's about 3% for everything else. So the point being is that there is no compelling alternative to the dollar, and nobody has been able to kind of show me that there's a compelling alternative to the dollar. It's just not. There's nothing out there. The second reason is that you have the financial pipelines of the world that are built around dollars. And you have the SWIFT payment system. You have a lot of things that are infrastructure-wise built around dollars. If you're going to create another currency to compete with the dollar, well, you need to build the pipelines. And it's incredibly expensive on top of having to convince people to use them. And if you hear, well, the Russians and the Chinese are doing that, the Russian economy as a whole, is about 2% of the global economy. They didn't trade much to begin with anybody else. the volume of trade with China, it's so minuscule relative to everything else that it's like, let them do it. It's like 0.0% nothing. Like it's not a big deal that they want to do it on their own. Great. Like it's nothing compared to the grand scheme of other transactions that happen in the world. And to kind of start saying we're going to build at scale pipelines, computer systems, and trading and clearance and settlement, that's just not happening. They even tried talking about this at the BRICS conference in Brazil not too long ago, and everybody's like, this is not worth the trouble. The juice is not worth the squeeze for that matter. And that's the second reason. And the third reason that I think it's very unlikely to change anytime soon is that these foreign currency reserves that you hear so much about, countries need to have some currency in case they need to use it, but they're not stashing dollar bills in a vault. That's not what they're doing. They're saying, oh, I have the dollar bills, but I want to grow it. I want to make some money of it. The same way that if you have some money, you want to put into some interest bearing account. But in the case of a country with reserves, they don't put it into a bank to make interest. What they do is they buy government bonds, because government bonds, they offer an interest on that particular currency. So then the question is, if you're going to have a competing currency for the reserves, you also need to have an incredibly liquid, large, and safe bond market for those government bonds. And nobody else in the world has anything close to the liquidity, the size, and the safety of U.S. government bonds. You look at the Chinese and even the Europeans, they issue a fraction of the bonds that the U.S. is issuing, and not sure that they're necessarily safer or more liquid. So because of these reasons, it's possible that one day the dollar might not be the dominant currency. I can't say it's impossible. At the moment, do I see anything clear? No. There is no competing currency that is a compelling alternative. The pipelines of the financial world are all built around dollars, and that's settlements and so forth. And number three, you also need the bond market, and there's no other country that has the robust bond market that the U.S. has.
That's great. I think I think part of the root of some people's questions and asking this question about the U.S. Losing their space as the dominant global reserve currency is when they see the inflation that we've had over the last 5 years and the increase in the money supply, and how that affects portfolio valuation. So I guess the question would be, sometimes you'll think of a precious metal as a hedge. But can you talk about why that's maybe not as good of a hedge and why, equities may be a better hedge?
Yeah, and that's really important. So we did have an inflation. So what happened was in 2022, as we had a just a pandemic and really a disruption to the global economic supply and how products were made and people couldn't go to work and so forth. So clearly there was a disruption at the time, and because we couldn't produce as much, all the goods and services that we're used to, we just couldn't produce them globally because of the pandemic. Whenever you have a situation like this where people still want to buy things, but there are not enough goods for sale, that's just a natural economic order. That's a very basic microeconomic situation where you have this supply that is kind of shrinking and the demand is still there. Well, prices are going to go up. So there's not a big surprise that happened in 2022. But Matt, what's interesting is that that particular inflation did not last very long. It went up to about 7, 8, 9%. And then it very quickly, within months, kind of came back to the desired range of 2 or 3%. So there was not a long lasting inflation. And it was something that we understood the roots of it. And if you want to get a sense of inflation, I would ask your parents. I want to ask my parents and my in-laws, like, okay, give me like a period when you had bad inflation. I mean, they both kind of said the same thing. Look at the early 80s. In the late 70s and early 80s, when we had this this situation with the Fed and the oil embargo and so forth, inflation was up quite significantly higher, 14, 15%. I mean, it was a much higher inflation, and it lasted a lot of years. And what we had now is like about 8-9% inflation, which is higher than we've had. But on the other hand, it came down very quickly. So I don't know that inflation at the moment still dominates the conversation. Today, if inflation was to come back, it's not caused by the pandemic or something that we don't understand. It's going to be, to some degree caused perhaps by tariffs. And that's a
Mhm.
decision that we made as a country, that hey, we choose to have tariffs, and we know that tariffs are likely to increase prices in some categories and at some point. And so that's a different root cause for inflation. And if it was to come, it's likely going to be something that the Fed will look to fight. So I would not say that loss in confidence would be because of inflation. Now, on the money supply, that has to do with what the Fed is doing, their actions, their activities. And the Fed, by and large, they did try to fight inflation by raising interest rates, and we did see interest rates go up. And it's exactly as they planned. As interest rates went up, we also did see the inflation coming down. And last year, pretty much exactly a year ago, when they saw that inflation had reached exactly the level that the Fed wanted, about 2%, that's when they start cutting rates. And they did it 3 times till the beginning of the year. And then once the uncertainty around tariffs came along, they paused and they just resumed that. But again, it's the Fed's, that's what typically it's called monetary policy, the money supply and how much money exists in society. That's the Fed's responsibility. It has not been a big factor in recent times. When you go back to the financial crisis, that's a different story, but that was a very different weird situation. But in the current situation, I don't see people seeing that there is reason to believe that the Fed releasing money in society is devaluing the dollar at all. It just doesn't seem the evidence is there for that.
That's perfect. Well, thanks so much for hopping on and sharing these nuggets with our clients. Appreciate you stopping in, and we'll talk to you soon.
Talk soon. Look forward to it.